one of the turning points of what has happened in the last 6 to 7 months, it has been the intervention of the Fed. America
Mhm.
has cut its rates nearly back to the zero rate environment. Um, there's new guidance that suggests that we stay at zero rate environment for at least until 2023. We had $3 trillion injected through quantitative easing. There's a lot of people for calling maybe for more. Maybe it comes, maybe it doesn't. Could you please talk a little bit about the role of the Fed in all of this, and really from the light of the debate of the type of recovery that we're going to have? As I'm sure you remember, back in the March, there was a big debate on the internet and everywhere about
Yes.
what type of economic recovery that we're going to have, like what type of the letter is going to have. Is it V? Is it U-shaped? And there's new letter that is being thrown out, K-shaped recovery. Maybe you can cover that, and how do you see the role of Federal Reserve in this, causing this like bifurcated response of the market?
Mm. Well, there's a number of questions built into what you've just asked. So let's start with basic things. So it's interesting to start with quantitative easing, right? Because we had quantitative easing after 2008, and it stayed in place for a long time. And a lot of people said that the economy could not survive without it because we got used to it. It was almost like, a drug addiction or something, And then how does the economy get off it? Well, it did, right? Rates started to go back up again, and that was kind of revolutionary. And here we are, we're back down
Mm,
again. Yeah. So, but I think there's a number of lessons here, which I think then will explain a little bit where the Fed is, I think, in terms of the economy and the markets. So, firstly, if you look at 2008 compared to today, right, two big crises, very different, right? Very different. 2008 was fundamentally a crisis in the financial sector and the financial system. There were huge liquidity issues, there were imbalances there, and the Fed needed to step in. Quantitative easing was fundamentally then to recapitalize banks and allow lending to occur and allow money to flow freely in the financial sector, right? The worry then was that the real sector would collapse if they didn't stabilize the financial sector. Some people agreed, some people didn't agree. If we look at 2020, it's a very different crisis. It is not caused by instability as such within the financial sector or imbalances. It was not caused by a crisis of confidence in the financial sector. It was caused by a virus and a pandemic and forced shutdowns, okay, in the real economy.
mm,
So, very different situation. Now, what's similar is the Fed did step in. When we last spoke, the Fed was stepping in a very big way. And I think that was positive. I give a lot of credit to the Fed and to other central banks, by the way, who have also done this to inject liquidity. Another thing the Fed did that was very important was provide a backstop for the credit markets which is a first, for corporate bonds, and basically said, look, we will stand behind, the credit of the corporate sector, which was a big statement.
mm.
And that did a lot of good. Okay. Having said that, this crisis is different. And so the Fed could do a lot, and it did, and it helped a lot, and it propped up markets a lot. But I think we start to reach a point, and I do get at this a little bit in this matrix, where the stimulus and the fiscal policy needs to step in, for two reasons. One, because the Fed runs out of ammunition, right? And I think the Fed has largely run out of ammunition.
Mm.
Um, and secondly, because what's needed is to shore up people, consumers, businesses, to make sure that they can keep people employed, people can continue to spend. And a good example of this is what's gone on in the US, which has been unfortunate, where stimulus packages have not been agreed for political reasons. They've been pushed forward, and real people in their lives have suffered. And that has now had a knock-on effect, and spending is declining, and people are afraid, so they're holding back. And so there's a knock-on effect for the economy. And so I think this is something the Fed cannot help. And the example of that is the last Fed meeting. They said a couple of things. One was we're concerned about the economy. We're concerned a bit that the economy will slow down if the stimulus is not put in place because people are starting to suffer. Why did they say that? They said that because they can't fix that. They depend on, or we depend on Congress to fix that. So it was an urging saying, look, we can't do this. You need to do this. And I think that's a good example that right now the stimulus is probably the most critical thing. The markets are reacting accordingly. The markets were rallying a bit this week because it looked like the stimulus is coming back.
Mm-hmm.
And I think that will continue to be the case. So I think this crisis is different from 2008. I think the central bank has done a lot to provide a backstop and a jump start to the beginning of the year. And now, really, fiscal policy needs to take over. We need to get better at all of the COVID related measures to be able to pinpoint and allow businesses to continue to function. And hopefully that gets things back completely, on track, or on track as much as possible. As to say one other thing, some industries will not be able to get back sooner rather than later without a lot of help. And the airline industry is a good example. Yesterday in the US, probably the largest layoffs in history took place in the airline industry. And those will be changed if there is a bailout or there is some money put forward. But that's kind of the place that we're in. If there's no demand, then there's only two things that can happen. Either companies have a lot of capital in reserve and can last, which is often not the case, or there's a stimulus put in place to shore up the companies to allow them to maintain the employment levels to some reasonable degree, or what we saw yesterday, people will be released. Those are the only options. So again, the stimulus package is very important, and we should keep an eye on that. And I think the central bank will continue to push that request publicly.